Joining me in studio now for a closer look at the equity space is Burgess from Nedbank Private Wealth. Kyle, thanks so much for joining us today.
Good to see you.
So that, in a nutshell, the trading day that was. Let's take a look at the JSE because, as I highlighted, it's that stronger rand environment that really came to bear on a lot of the rand hedges today, a lot of the big industrial stocks in particular. But having said that, the market did gain 2.4%, hitting record highs last week. So is this kind of pause we're seeing to be expected?
Yeah, I think so. I mean, we saw some pretty flat trading. There really wasn't much volume that went through today on the market, in fact. And, you know, given that we were almost 0.5% down on industrials, and Naspers, which makes up essentially about 20%, was down very close to 2%, we only lost 100 points, so not a bad result. We're still well above 56,000, which is very close to record high territory. So, yeah, certainly different factors at play in the market at the moment, and probably the stronger rand, you know, really playing a big role in that at the moment. But really, I think that's more on the dollar side than the rand side at the moment.
Yeah, and it depends which way you look at it, because as we highlighted, that stronger rand coming to bear on the rand hedges. But if you're looking at a Woolies, for example, you know, it's come under pressure. In fact, the worst performer on the top 40 index today, falling back a further 3.3% by the close, and that despite a stronger rand usually being supportive of something like the retail sector.
So, yeah, that's unfortunate. I think we saw Pick n Pay also down 4.5%, and, you know, I think if you look at it going forward in the next few months in this sort of environment, retailers are really faced with quite a tough proposition, to be honest with you. So as an investor, I think it's quite a difficult space to be. We've seen them really rally quite nicely, but come down just as quickly on the back of you know, the interest rate environment that's really changed quite substantially over the last sort of 18 months.
Unless, of course, you're a ShopRite, which closed 1.5% higher and still managing to maintain that positive momentum after it released results last week.
Yeah, so I think you know, if you look at the context of the results that they delivered, they really are, you know, delivering some solid top-line growth. And, you know, if you look at that in comparison to Woolies, they really are struggling to find their feet in Australia. I don't think that has really worked out, you know, as the investment that they wanted it to. You know, they've started to spend a bit more money in terms of capex in Australia at the moment, trying to get that food business going. You know, so I think there's certainly a lot of different factors in the food producers, as well as the credit retailers that you need to look at, and certainly not an easy environment for them. And I think they're still paying out, you know, quite nice dividends. So I think in the long term, it's certainly something that we need to keep our eye on and be cognizant of.
Let's flash forward to results that were released today, though. Bidvest was out with numbers and, to an extent, boasting quite a bit of resilience despite the South African trading environment, the tough trading environment. It puts it down to the fact that it's a very diverse offering that it's exposed to right now. What have you made of the numbers it's put on the table? Yeah,
certainly, and it's not, you know, if you ever look through the sort of management's commentary, and it's not unlike a lot of companies that we've seen, very difficult trading environment, political uncertainty. So the backdrop that they're operating in is very difficult. And if you look at their portfolio, 5 out of the 7 sort of industries that they operate in, and they've broken it up into, you know, were positive. So I think that led to sort of 6.2% headline earnings growth. Excuse me, which was great. And then other investments like ADvTECH Ingram, which, you know, they've got a 30-odd% stake, and, you know, that's performed exceptionally well over the last 12 months, so that was great. And then there were some revaluations, I think, in the airport business that they own in Mumbai, so that added positivity to it. You know, also, so what was quite interesting, that they'd bedded down the 175 million euro acquisition of Noonan, which is obviously operates in Ireland as well as the UK. So, you know, what's quite interesting is that they said that you know, the business is still looking for acquisitions, and that will be largely offshore.
Largely offshore, but not fully discounting the kind of investment it's going to be making within the South African ambit. So let's take a look at you know, what it is doing. Infrastructural development spend in South Africa is one of its focal points. Does that make you nervous, the kind of capital commitment it's making to South Africa right now, given the economic and political climate we're faced with?
So I think, yeah, it's a question that's come up quite a lot. You know, does the South African environment concern you? And you know, no great investment is ever made without, you know, taking on some sort of a risk. You know, and I think that we know what we're working with at the moment. I think we'll have a much better idea come sort of December. But certainly investment in infrastructure in South Africa is certainly a place that, you know, is attractive at the moment, I would say, but it definitely comes with some risks.
Well, a company that is exposed to South Africa's blue chip companies is ADvTECH, also out with numbers. Turnover up 25%, normalized headline earnings per share making a 10% rise. A lot of that had boosted by the acquisitions it's made over the period. But aside from that, its release today lacking very much detail.
Yeah, and it did reflect it in the share price. I think at one point down 3.5%, which is quite unfortunate. We've seen that stock come down from well over 16 rand a share to to trade quite comfortably at 9 rand a share. So a loss of roughly 45% on the market cap, which is not ideal. And I think if you look at the results, they produced 25% headline earnings growth, but only 6% of that really being organic growth. And that's one of the concerns that investors have sort of voiced around the ADvTECH sort of model, that they're not going to be able to continue this sort of organic growth. And with the share price coming off, it does concern investors that they won't be able to continue on their sort of acquisitive path, which has really been something that's been fantastic for them in the last sort of 18 months, 2 years.
Absolutely, and whether organic growth is going to sustain this business moving forward. Lots of speculation, though, that ADvTECH has been tainted or painted with the same brush as EOH. Having said that, EOH 32% down year to date. ADvTECH harder hit, having lost to 40%. So
I think they operate in probably in the same sort of environment, but ADvTECH really, if you look at it, they are a smaller cap company with probably 75% of their earnings coming from South Africa. That doesn't bode well for them. That has not been a very loved sector over the last sort of 8 months. So I can see there are certainly differences in it. But I think if you have a look at it, the difference between a 40% and a 45% decrease in the share price, it's sort of insignificant, unfortunately.
Absolutely. Well, let's wrap up this conversation with your stock pick at the moment.
So my stock pick at the moment is ADvTECH. I think it's a bit of a toss-up at the moment between Curro and ADvTECH. But what I do like about ADvTECH is really their diverse brands that they hold in their tertiary education space, and that's really been a strong performer in the market. So given the share price that has come off a little bit, the fact that Curro's their secondary schools haven't really performed as well over this last period, I'm going to go with ADvTECH, particularly if it's not a holding in your portfolio.